What if I told you that one single announcement could completely reshape the future of global banking, and at the center of it all is XRP? Yes, right now there's a massive wave of speculation exploding across the crypto space after reports claim that Ripple has secured a banking license. And if this turns out to be true, we're not just talking about another crypto pump, we're talking about a potential financial revolution. According to the Post, Ripple's valuation has already reached a staggering $120 billion, with over 40 billion XRP sitting on its balance sheet. Let that sink in for a second. That's not just a company holding crypto, that's a financial powerhouse positioning itself right at the core of the future digital economy. And here's where things get even more interesting. If XRP crosses the $6 mark, projections suggest Ripple could surge beyond $240 billion in value, putting it in the league of the world's top global banks. That's not hype anymore. That's serious competition. But the real headline grabber here is the claim about a $650 trillion market. Yes, trillion. The idea is that XRPL or XRPL could become the infrastructure powering massive flows of real-world assets, tokenized finance, and institutional money. We're talking about real estate, commodities, and financial instruments being digitized and moved across borders instantly. If even a fraction of that market flows through XRPL, the implications for XRP's price and adoption are enormous. Now, some projections mentioned in the Post might sound almost unbelievable, like XRP moving from just a few cents to nearly $1,000 over time as adoption grows. And while that kind of prediction should always be taken with caution, it highlights something important: the level of confidence and excitement building around XRP's potential role in the future of finance. But here's the reality check. Not everything you see online is guaranteed to happen. The phrase "do your own research" or DYOR is there for a reason. Crypto is a space filled with opportunity, but also risk, speculation, and misinformation. Just because something is trending or going viral doesn't mean it's confirmed or inevitable. Still, there's no denying that XRP continues to be one of the most talked about assets in the crypto world. Whether it's partnerships, legal developments, or now banking ambitions, Ripple keeps finding ways to stay in the spotlight. And that's exactly why investors, traders, and institutions are watching closely. So the big question is, are we witnessing the early stages of XRP becoming a global financial bridge, or is this just another wave of overhyped speculation? Only time will tell, but one thing is certain: if even half of these claims turn out to be true, the financial world as we know it could be on the edge of a massive transformation.
What if the biggest thing holding crypto back is finally about to disappear? Imagine a world where uncertainty is gone, regulations are clear, and institutions can finally go all in without fear. That's exactly why the latest statement from Ripple's CEO is sending shockwaves across the crypto market right now. In a recent update, Brad Garlinghouse revealed that there is an 80% chance the long-awaited Clarity Act could pass through Congress by April. Now, if you're wondering why that matters, this isn't just another piece of legislation. This could be the moment that defines the future of crypto in the United States and potentially the entire world. For years, the biggest problem in crypto hasn't been technology, it's been uncertainty. Companies didn't know how they'd be regulated, investors didn't know what rules applied, and institutions, they stayed on the sidelines waiting for one thing: clarity. And now, that clarity might finally be within reach. The Clarity Act is designed to clearly define how digital assets like XRP are classified. Are they securities? Are they commodities? Or something entirely new? This confusion has been at the center of major legal battles, especially between Ripple and regulators. But if this act passes, it could finally settle the debate once and for all. And here's where things get exciting. If institutions finally get the green light, we could see a massive wave of adoption unlike anything before. Banks, hedge funds, and financial giants that were previously hesitant could suddenly start integrating crypto into their systems. And XRP, being one of the most institution-focused digital assets, could be right at the center of that shift. Think about it. XRP was designed for cross-border payments, fast transactions, and low fees. It already has partnerships and infrastructure in place. So if regulation clears the path, XRP isn't starting from scratch. It's already positioned to scale rapidly. That's why you're seeing phrases like massive wave of adoption being thrown around, because this isn't just hype anymore. It's a potential turning point, a moment where crypto transitions from a speculative market into a fully integrated part of global finance. But let's stay grounded for a second. An 80% chance still means there's uncertainty. Laws can be delayed, modified, or even rejected, and markets don't always react the way people expect. So while the opportunity is massive, so is the risk. Still, the fact that we're even having this conversation shows how far crypto has come, from being dismissed as a niche experiment to now being debated at the highest levels of government. That alone tells you something big is happening. So the real question is, are you early to one of the biggest financial shifts in history, or are you watching it unfold from the sidelines? Because if regulatory clarity truly arrives, the floodgates could open, and when they do, the market may never look the same again.
What if everything you thought you knew about the financial system was only half the story? And what if behind the scenes, a silent battle has already been taking place, one that could determine the future of money itself? Because according to recent statements, Ripple and XRP may not have just been competing, they may have been actively pushed back by the very institutions they were trying to disrupt. A shocking claim is now circulating that major banks and even the global payment giant SWIFT have pushed against XRP, allegedly forcing it out of a major event. Now think about that for a second. Why would some of the most powerful financial institutions in the world feel threatened by a digital asset? The answer might be simpler than you think, because XRP represents change, and change, especially in finance, is never welcomed easily. For decades, systems like SWIFT have dominated cross-border payments. Slow transactions, high fees, and outdated infrastructure have been the norm. Then comes XRP, offering near-instant transfers, minimal costs, and a decentralized approach. That's not just innovation, that's disruption. And disruption challenges power. But here's where things take an even bigger turn. There's growing discussion around a $650 trillion market, yes, trillion, that could eventually flow through blockchain systems like the XRP ledger. This includes tokenized assets, global payments, and real-world financial instruments being digitized. If XRP positions itself correctly within this ecosystem, it's not just competing with banks, it's becoming part of the backbone of a new financial era. And it doesn't stop there. There's also talk about projects being built on top of XRPL, including RealFi and tokens like Real, which are aiming to capture value from real-world assets and financial flows. Some projections even suggest massive growth potential, with prices moving from just a few cents to hundreds of dollars as adoption accelerates. Now, whether or not those numbers become reality, the narrative is clear. People are starting to see XRP as more than just a cryptocurrency. It's becoming a symbol of a shift away from centralized control toward faster, more efficient, and more accessible financial systems. But transitions like this are never smooth. Resistance is expected. And if these claims about banks pushing back are true, it only reinforces one thing: XRP is a serious contender. At the same time, it's important to stay realistic. Not every claim you see online is verified. The crypto space is filled with bold predictions, speculation, and sometimes exaggeration. That's why doing your own research is more important now than ever. Still, one thing is undeniable. The conversation around XRP is getting louder, the stakes are getting higher, and the possibility of a massive transformation in global finance is becoming harder to ignore.
What if holding XRP is no longer just about waiting for the price to go up, but actually making your assets work for you every single day? For years, XRP holders have been doing the same thing, buying, holding, and hoping for that one big breakout moment. But now, a new narrative is starting to emerge, and it's changing the game completely. The idea being introduced here is simple but powerful. Instead of letting your XRP sit idle in a wallet, what if you could deploy it into liquidity systems that generate consistent returns? Not hype, not speculation, but actual yield. That's the shift being talked about, a move from passive holding to active earning. According to this concept, platforms are being developed where XRP can be placed into liquidity pools. These pools help power financial activity behind the scenes, and in return, users can earn rewards. The key advantage being highlighted is flexibility. Unlike traditional staking models where your funds might be locked for a long period, this approach suggests you can maintain full control of your assets while still earning from them. And this is where things start to feel different, because now XRP is not just being viewed as a digital asset waiting for price appreciation. It's being positioned as a productive asset, something that can generate daily value. That's a major psychological shift for investors. The system shown also hints at how this process works. Users deposit XRP into a liquidity pool where it is then managed through allocation strategies. These strategies aim to generate yield from various sources, including fees, spreads, or other financial mechanisms happening within the ecosystem. Then, users can withdraw their XRP along with the rewards they've earned over time. If this model gains traction, it could completely change how people interact with XRP. Instead of asking, when will the price go up, the question becomes, how much can my XRP earn for me right now? That's a completely different mindset, and one that aligns more closely with traditional finance, where assets are expected to produce returns. Of course, it's important to approach this carefully. Any system promising yield comes with risks, especially in crypto. Not all platforms are equal, and not all opportunities are safe. That's why understanding where your assets are going and how the system works is critical. But still, the message here is clear. The next phase for XRP may not just be about price. It could be about utility, liquidity, and real financial productivity. And if that shift truly happens, it won't just change the market, it will change how people think about holding XRP altogether.